Most retirees dream of one thing: to live tax-free in retirement. But what if I told you that the way most people save for retirement actually makes that dream almost impossible? You see, many hardworking Americans spend 30 or 40 years doing everything right. They max out their 401ks, contribute to their IRAs, and feel confident because those accounts are growing. But here's the problem no one talks about. When they finally retire, every dollar they withdraw from those accounts is taxed as ordinary income. And if they're not careful, those withdrawals can push them into a higher tax bracket, increase their Medicare premiums, and even make their Social Security benefits taxable. In other words, the same system that helped them build wealth now punishes them for using it. Meanwhile, the wealthiest retirees, the ones who quietly live with comfort, flexibility, and confidence, play by a completely different set of rules. They're not cheating the system, they're simply using the system better. They understand how money moves through the tax code, and they design their income so that most of it never shows up on their tax return in the first place. So in this video, I'm going to break down the 3 hidden rules the wealthy follow for tax-free retirement income, and how you can start applying the same principles even if you're not a millionaire. Because the truth is, tax-free retirement isn't luck, it's strategy. Hi, I'm Josh Bliss, investment advisor representative and founder of Gateway Capital Management, now proudly under Balboa Wealth Partners. If you enjoy learning how to make smarter financial decisions that give you both freedom and control, make sure to like, comment, and subscribe. It helps more people find this kind of information and retire with clarity. All right, let's get started. Because once you understand these 3 hidden rules, you'll see how the wealthy legally and strategically build income that's designed to last for decades, often with little or no tax burden. Rule number 1, they don't just save, they strategically position their money. Let's start with something simple but powerful. Most people focus their entire working lives on how much to save, but wealthy retirees focus on where to save. Because not all dollars are created equal when it comes to taxes. Take the traditional 401k or IRA. When you contribute, you get a tax deduction today, but that money grows tax deferred, not tax free. And eventually when you retire, you'll owe taxes on every dollar you withdraw. And here's the kicker. Those withdrawals don't just increase your income taxes, they can also make up to 85% of your Social Security benefits taxable. And they can trigger Medicare surcharges known as IRMAA. In other words, tax deferred doesn't mean tax-free. It just means you postpone the bill, often until a time when you can least afford it. That's why the wealthy do something different. They build 3 distinct tax buckets. 1, taxable accounts, brokerage accounts with after-tax dollars where dividends, interest, and capital gains apply. 2, tax-deferred accounts like 401ks and IRAs, where taxes are postponed until withdrawal. Tax-free accounts, Roth IRAs, Roth 401ks, or properly structured life insurance policies, where growth and withdrawals can be tax-free under current law. By balancing across all 3, they gain something the average retiree doesn't have: control. When taxes rise, they pull more from tax-free buckets. When markets fluctuate, they can adjust withdrawals strategically. And when it comes time for required minimum distributions, they're not forced into higher tax brackets because they plan their mix in advance. That's the first rule. Don't just save for retirement, position your money for flexibility and control. If you'd like help building a tax-efficient retirement income strategy, book a call with me and I'll walk you through how to position your money for more control and less tax. Rule number 2. They use the tax code, they don't fight it. Here's something that might surprise you. The U.S. tax code is nearly 7,000 pages long, and most of it isn't about collecting taxes. It's about how to avoid them legally. You see, the tax code isn't designed to punish wealth, it's designed to encourage behavior. The government rewards actions that stimulate the economy or serve public good, like investing for the long term, donating to charity, or creating jobs. Wealthy retirees understand this. They don't try to fight the system, they use it. Let me give you a few examples. 1. Roth conversions. Instead of waiting until retirement to face large taxable withdrawals, Many wealthy retirees convert portions of their 401ks or IRA into a Roth IRA in lower income years, often between retirement and age 73 before RMDs begin. They pay tax now at a controlled rate, and they enjoy tax-free growth for life. That means every dollar they withdraw from that Roth later is completely tax-free, and it doesn't affect Social Security taxation or Medicare thresholds. 2. Tax loss harvesting. When markets drop, they don't panic, they act. They sell investments at a loss to offset gains elsewhere, reducing their taxable income for that year. That's turning volatility into opportunity. 3. Qualified charitable distributions, QCDs. After age 70 and a half, they can donate directly from the IRA to a charity, satisfying RMD requirements without paying income tax on the withdrawal. It's a simple, elegant way to support causes they care about while lowering their taxable income. 4. Municipal bonds. They invest in municipal bonds, which often pay interest that's exempt from federal and sometimes state taxes. For high earners, that can translate into thousands in annual tax savings. These aren't loopholes, they're invitations. They're written right into the tax code to encourage smart behavior. So the wealthy use them year after year to build income that's not just stable, but efficient. The second hidden rule is simple but powerful. Don't fight the tax code, learn how to use it. Rule number 3, they build tax-free cash flow, not just tax-free accounts. This is the biggest difference between an average retiree and a wealthy one. Most people focus on having tax-free accounts, but the wealthy focus on creating tax-free income. They understand that the key isn't the account itself, it's the flow of money. Let's look at an example. Say you need $120,000 a year to live comfortably. The average retiree might take that entirely from a 401k. But because every dollar is taxable, they might have to withdraw closer to $150,000 just to cover taxes, effectively losing 20% or more to the IRS. A wealthy retiree does it differently. They might take $60,000 from a traditional IRA, which is taxable, $30,000 from a Roth IRA, which is tax-free, and $30,000 from a properly structured life insurance policy, which is also tax-free. That mix keeps them below key tax thresholds, limits their Medicare surcharges, and minimizes Social Security taxation. Same lifestyle, completely different tax bill. They've built a system, one that allows them to blend different income sources in the right amounts each year to maintain a low overall tax footprint. And here's something else they do. They plan withdrawals years in advance. They coordinate investment returns, timing of sales, and tax bracket management to keep income consistent, even through market volatility. That's what allows them to pay less in taxes, reduces stress, and sleep better knowing their income plan is designed, not improvised. So remember, it's not enough to have tax-free accounts. You need tax-free cash flow, consistent, strategic income that keeps your effective tax rate low year after year. That's the third hidden rule. Let me give you a practical scenario. Imagine 2 retirees, John and Lisa. Both have $2 million saved for retirement. John kept everything in his 401k. Lisa diversified between a 401k, a Roth IRA, and a permanent life insurance policy. By the time they're both 67, John starts withdrawing from his 401k. His income jumps, triggering taxes on 85% of his Social Security benefits and an IRMAA surcharge on Medicare. Lisa, on the other hand, takes a blend of taxable and tax-free income, keeping her taxable income lower, her Medicare premium steady, and her Social Security completely untaxed. Over a 25-year retirement, Lisa ends up with hundreds of thousands more in after-tax income. Not because she earned higher returns, but because she followed a smarter sequence of withdrawals. That's the power of positioning, planning, and flow. Let's recap the 3 hidden rules that separate the wealthy from everyone else. Number 1, position your money. Build your 3 tax brackets before you retire. The earlier you start, the more control you have. 2. Use the tax code. Take advantage of the incentives designed to reward long-term intentional financial planning. 3. Create tax-free cash flow. Blend your income strategically each year to keep taxes and stress to a minimum. Wealthy retirees don't rely on luck or timing, they rely on structure. Because in retirement, every dollar you keep after taxes matters more than every dollar you make before them. And when your plan is built around control, not guesswork, you give yourself the freedom to enjoy retirement on your own terms. If you're approaching retirement and want to make sure your plan is structured for tax-efficient income, let's talk. Book a call using the link in the description below, and I'll walk you through how to build a custom retirement income plan that helps minimize taxes, maximize cash flow, and give you confidence for the years ahead. Because you've already done the hard part, earning and savings. Now it's about keeping more of what's yours. And if you'd like a complimentary copy of my Roth conversion playbook, click on the link below. It gives you defined, easy steps to execute your Roth conversion plan. Thanks for watching, and if you found this helpful, make sure to subscribe for more weekly insights on building a smarter, more confident retirement.